We are talking technology, which is changing all of our lives. Now, last year, right here on this stage, our panel identified that there were going to be changes in terms of how we did business, in terms of risk management, business processes, really changes across the entire financial landscape, and that panel nailed it. All that has come to pass. In addition to that, we have added a new term to our lexicon, generative AI, helping us to make sense of all of these new changes and new technologies and how they are going to transform the world of finance. We welcome our panel now, which will be led by Nicolas Aguzin, the Chief Executive Officer of the Hong Kong Exchanges and Clearing, also known as the Hong Kong Stock Exchange. Nicolas, please come on up. Don't be shy. He is going to be joined on this panel by Henry Fernandez. Henry is the Chairman and CEO at MSCI. Joining him as well is Jane Fraser, the CEO at Citi, and as well Jenny Johnson, who is the President and CEO of Franklin Templeton. Nicolas?
Thank you very much.
Go for it.
Okay, thank you. Good afternoon, everyone. It's going to be great to share insights with this wonderful lineup of speakers that we have here today to talk about technology, which is, of course, of great interest to everyone in the financial community. And last year, we did explore technology in quite a bit of detail, and we talked about all the disruptive potential of technology, particularly around the value proposition that it has for institutions, for how it changes the business process, and also how we manage risk management in that context. So today, we're going to explore what happened in the last year, what have been the changes, and a year is a really long time in terms of technology. Lots of things can happen. We're going to be talking about generative AI, DLT, tokenization, digital assets. So we're going to go right into it, and thank you very much for being here to all of our panel. I'm going to start with Henry, with one of the hottest technology topics of the year, which is generative AI. And Henry, you just announced an agreement with Google to cooperate in terms of generative AI. So it'll be great if you can tell us a little bit how you're applying AI in your business and how is it transforming your industry.
Well, first of all, it's a pleasure to be here, Eddie. Thank you for the invitation. This is my 44th year coming to Hong Kong, and I've seen a lot of change, and the more I come, the more I like it, the change that is happening here. Pleasure to be in this panel here as well. We were joking that we could conduct this panel in Spanish, but we are, or Mandarin, but we're gonna do it in English. First of all, a lot of what we do and what we help power the investment and finance industry is based on three things: investment data, investment models, and investment technology. So data, models, technology, almost like lettuce, tomato, carrots, right? And therefore, this generative AI, we've been using predictive AI for about 10 years now, but it's a totally different game now with generative AI. It takes us to a completely different sphere in those disciplines, which is the ability to capture, store, and use data. The world runs on data. Everything we do is a lot of data at its foundation. So the ability to do that. Secondly, the ability to use models and embed AI into those models is going to be totally transformative. And by models, I mean performance attribution, risk management, liquidity, obviously ESG ratings, climate metrics, the ability to accelerate, the use of those models, and being able to put in almost like an artificial intelligent agent or analyst embedded in the products so that we can, you can interface with that. And obviously the impact on technology, we estimate, and we're already going through this, that we can save 35 to 50% of our coders' time. We have about 2,000 technologists in our company through the use of AI in helping write code. So the partnership with Google was predicated on, initially was the use of Google and Microsoft for cloud computing, but then we migrated to, Google is the best data company in the world. All of us get mesmerized by the search engine of Google. That search engine will be useless without the underlying data structure. So Google is going to help us become the largest data gathering, data building company in the investment industry. And the second part of the partnership was, how do we use their generative AI concepts and models with that underlying data? In our everyday life, we can use AI to query a lot of things, get nice information. In the investment and finance industry, you need an extreme level of accuracy when you ask questions. You cannot joke around and get half an answer. So being able to use machine learning and some of the models to then query a huge but very defined set of investment data to come up with very accurate understanding of that is going to be transformative, and that's what they're going to help us with.
Great. Well, thank you, Henry. Jane, switching to you, Citi has been talking about the use of generative AI for quite a bit of time now, and you have really embraced it for some years. Now, one of the topics that a lot of people are questioning about, generative AI is a little bit of a black box in terms of the outputs, how some decisions are being made and all that. So love to hear what you're doing around generative AI, and specifically, how do you manage all the potential risks and reputational issues emerging from the use of generative AI?
So I think, like Henry, we very much view generative AI, when it sort of came on the stage last November, as a once-in-a-lifetime change. And with that, where we see the opportunities outweighing the risks of AI and generative AI, recognizing that there are both. And so we embrace it for both our customers and what it can do for them, as well as for amplifying the power of our people. And on the people front, we basically look at it and say, so if you think of an average person's job, about 80% of the time is processing, 20% is content, and we expect that to flip through the amplifying power of AI as it comes through. I certainly hope it will do so for me. And then when we then think about how do we then act responsibly around it, we put in place a Center for AI Excellence in 2021, which we're now using for generative AI as well, just to help guide us. And we have a series of principles, and those principles are around innovation, how we innovate, they're around how we manage the risk, as well as how we govern ourselves. And they've proven very useful indeed for how we're then thinking about the development of AI within the firm, the type of control environment, and proceeding with high ambition, but also considerable caution. We're hoping that by the end of the first quarter next year, we'll have all 40,000 of the coders that we have in the firm fully enabled around AI, and we're conservatively thinking we'd expect to see at least a 10% productivity uplift from them. I suspect it's going to be much, much greater in the future. The initial pieces we're seeing is in terms of the productivity uplift is our lower performers are getting up to roughly the same standards as the higher performers. But the early days is really around the coding side and productivity. It's when we start looking at how we're going to start treating customers, the customer servicing aspect, that you get pretty excited. But then you've got to make sure you've got principles such as fairness, human centricity of AI, and these other principles that become very relevant for guiding how we do that. I can see Jenny's chomping at the bit here to jump in on investing.
So, we've been using AI for a while in investing. And if you think about investing, it's actually really simple. There's only 3 decisions you make: buy, sell, size. And so in the decision and looking at your own biases in that, you're deciding, whether once you've made a decision to buy, how quickly do you do it, how quickly do you size it, and do you lag in selling it? And so using AI and machine learning to just get better and better has been something that we've incorporated to our investment processes. Our emerging market team, which does active management, but has built a quant overlay to try to build in some downside protection. So those are all kind of the machine learning portion of it. Generative AI, as both Henry and Jane said, I think is a game changer in the sense that, well, first of all, think about generative AI as like, this is how it was described to me by our tech portfolio manager. It's like a really smart intern. So you'd never trust the judgment of the intern, but you're going to take the information. So that's one. Second of all, it's like the student who gets an A in the English class, but is failing math. It does not deal with numbers at all. And then the third, it's a bit like if you've ever paid a trainer to train your dog, you learn that 20% of the effort is training the dog, 80% of the effort is training you as the owner of the dog. And generative AI is a bit like that. It's actually, when you think you're training a model, it's actually learning how to engage with that model to iterate and get better and better, and that's much more challenging. And then, the types of opportunities, we were trying to just brainstorm on ideas. Like if you think about, you have a big macro event, Russia invades Ukraine, you can immediately say to your portfolio, tell me the companies that are impacted by this. And it can go out, it looks at all your historical write-ups and analysis on that. It looks at all regulatory filings. It can look at social media. You'll have models that will look at images and come back with kind of a first cut. Now, of course, humans going to have to then look at it, but a first cut at analyzing quickly, where should I focus within my portfolio?
Okay, very interesting. I love the analogies that you used about AI. So, Jane, turning back to you around, mostly around the fintech space and what's happening around other types of technologies like blockchain, digital assets, and what Citi is doing to use those to really enhance the experiences. And what do you see as the key challenges and opportunities for global banks, and how are you approaching all this space?
This is one of the areas we give a real shout out to HKMA as well, around the framework that's been put in place, because I think we've seen as new technologies, particularly in the digital asset space, come out, if you don't have the right framework around, it really inhibits both the innovators, it inhibits the institutions, it certainly inhibits the users and the consumers. So having the framework, this is an area we've certainly found HKMA, so thank you, Eddie. It provides exactly that, and I think that's why we're seeing quite a few of the leaps forward here in areas such as tokenization and the like. Blockchain took a long time to really get some more sort of traction in many of the different areas compared to, I think, what we all thought about a decade ago. I remember we first went to the board 10 years ago with blockchain, thinking it was going to be faster in it. What we're seeing at the moment is more of now, I think, the convergence with tokenization in the technologies between what's happening in the real world, as it were, together with these technologies. So I'll give you an example. One of the big canal authorities in the world that we work with, we've put together smart contracts together with the payment capabilities and the tokenization on a blockchain ledger that now enables ships, instead of waiting a day and a half and having to put things through fax machines, it takes about a minute and a half for the payment, together with all of the documentation, the smart contract, to get the permissioning to go through. So the types of efficiencies we're starting to see from the technology, it gets to be very exciting. Similarly with the RLNs, as we start seeing CBDCs getting connected together with the actual payment networks around the world. We've been doing some work with the Fed on that. We've been seeing Banco do Brasil doing the same thing. Brazil and the UK, obviously this part of the world is doing a lot of innovations there. But it's seeing these two converging, I think, is where we're starting to see much more action and greater traction coming. and it's getting much more exciting. But again, we need to have the right regulatory framework for us to be able to work on this in a responsible way to everybody's benefit. And that's when things start getting going.
Yeah, Jane, and I'd like to just complement what you said about regulatory environments, and I agree with you that, Eddie, I mean, the way that you're approaching, regulatory environment, and also Julia, SFC, how you cooperate, I mean, with HKMA and with all the government policy makers to make sure that not only you're thinking about the safety and security of the system, but also in a future-looking way, constructive way, trying to leverage all the new technologies. So it's really fabulous to see an environment that is very forward-looking and proactive. So turning back, Jenny, to you around the use of tokenization, blockchain, you've been using that quite a bit, and how do you see that affecting the asset management industry?
Well, first of all, I couldn't agree more with Jane on 2 points. One is...
That's a first.
One is that from an infrastructure standpoint, huge opportunity, and I think we all recognize it over time as these various projects come together. There's going to be great cost efficiencies in the system. And two, the work that's done with HKMA and in Hong Kong here on the regulatory front, we're following it all over the world, and you've been real leaders because you've been willing to come out with very clear guidance on that, so that's great. So Franklin Templeton got involved in blockchain. Early on, the first thing we did was decide we wanted to do a tokenized money market fund. And so we built a shareholder servicing system on chain, and then we actually worked with the SEC, so it's an approved, regulated money market fund. And in that process, we saw a couple things, so, as well as a hot cold storage wallet. So it gave us some good insights into how the cost, because we ran 4 of our own transfer agency systems historically, and we were astonished even ourselves to figure out how much less expensive it was to run it on chain. And then 2, we ended up, you had to hold coins because you need to be able to pay for the transaction. So this is a public chain money market system. So transactions are on a public chain. Obviously, the shareholders' information is on our private chain. And so as we then started to hold, we did on the Stellar Network, Lumens, we started to recognize, wow, if you hold these, it's interesting, as a node validator, you're learning a lot of information about what's going on. So today, we actually validate 5 different chains. And for those who completely think about dismissing this, I just want to say that the Ethereum network, if it were a public company, hit 10 billion in revenue at about the same pace as Google and Facebook hit 10 billion in revenue, faster than Microsoft, Workday, and Salesforce. So whether you can get comfortable with the Ethereum coin as revenue, there's something very real here. And so as we looked at that, we then built kind of active management strategies around that. So we actually have a team. If you read the write-ups that our team will do, I think there's 30 coins that we feel very, very comfortable with. It would be as detailed. As a matter of fact, they came out of our fixed income group. It would be as detailed as any write-up that we have anywhere in our equity or fixed income world. And then what gets us really excited is that what Jane was talking about is just the efficiency of this. So if you think about blockchain, it does 3 things, right? So number 1, it has a smart contract, so it's the ability to just execute a contract without anybody getting involved, no title company to prove that ownership or anything. Number 2, it has a payment mechanism. And number 3, because it's a general ledger, you don't have to validate that the rights of whoever owns it has all the rights to the contract, right? So it takes a lot of the friction out of transactions. And if you can do that, you can actually fractionalize transactions more. So my favorite example to bring this home is Rihanna, the singer, who came up and issued 300 NFTs, each one with the right to 0.00033% royalty of one of her biggest songs. Well, why can she do that? Because when the streaming service plays her song, the smart contract can kick off, and those fractions of pennies that or fractions of, of whatever the payment is, comes in and then comes right into whoever owns that in the wallet. So you can imagine that there are going to be the ability, blockchain's going to unlock uncorrelated, untraditional types of investment capabilities that people, and you're already seeing it, I won't spend any more time, but you're already starting to see those, that will be uncorrelated to the rest of your portfolio, which as an asset manager is really interesting to us.
Well, digitalization is obviously affecting the financial markets to a great degree. And Henry, I'll come back to you and just like ask you the question, how is technology, but also data, metrics, indices, how are you using all that to make sure that investors are allocating their assets in the right places, and how can you help in that decision-making process?
So if you just think about holistically at MSCI, there's about $15 trillion of assets following our indices. There's about $20 trillion of assets being risk managed in our platform, in our servers. And there is about $15 trillion of data in our private asset class databases. And all of, and if you just take the last one, $15 trillion of private real estate, private equity, private debt, private infrastructure, and it's all digitalized already. It's all in place. So the ability to then build models on top of that with the latest technology and being able to look at the underlying characteristic of each one of these assets. For example, in real estate, we collect about 130 different fields for every property, some hundreds of thousands of property in the world. So the ability to be able to gather that information, which we have, being able to then use models for climate emission estimates, for example, for implied temperature rise, metrics, and being able to project the climate emission and the climate risk of those assets and the climate emissions of any one of those entities, and correlating that to the balance sheet of banks, the asset under management of asset managers, et cetera, is an enormous game change in our industry. So again, is the ability to collect the data, and we obviously using advanced technology, and then being able to build models. So what we're on the cusp of seeing in the investment industry is the equivalent of the search engine on top of the data from Google. So if you look at that, that is the incredible game change that is taking place right now, and we're at the cusp of explosion of that.
You've been quite focused on ESG. Are there areas of ESG that you think this is going to be very important?
Yes, I normally jokingly say that at MSCI, we're collecting more information about every single issuer in the world that all the intelligence agencies in the world combine, right? That makes us, a big target sometimes, but being able to do that and then being able to look at that data and look at the social characteristics of those issuers, the governance, the climate, and all of that is going to be able to shed an incredible amount of transparency of every economic agent in the world.
Mm-hmm. Great. All right, so just to wrap up, because we're running a little short on time, besides what we discussed, blockchain or artificial intelligence, generative AI, what other technological development or analytical innovation should we keep an eye on, or are you focused on? And let me start with Jenny, then we'll go with Jane and Henry.
I won't steal yours, Jane. I'll go with something else. She gave me a heads up on where she was going. I'm going to actually say it's the convergence of all these technologies that is enabling such great breakthroughs. And I just read about two things that I just thought were amazing to think about. And again, generative AI is built on cloud computing. It's built on so many things. So one was the head of AI at Stanford University shared that there was a professor at Stanford that spent their entire career mapping a single protein in the genome on a human. There are about 20,000 proteins in the human genome. They then used generative AI or some sort of AI, and they mapped all 20,000 of them in 1 year. So imagine that professor spent the entire lifetime. So think about that amazing breakthrough that we're going to have. So, and there's story after story where you're just going to see massive productivity, which will then open up tremendous opportunity and innovation.
Yeah. So I was torn between two. The obvious one, which I think is on everyone's tongue, will be quantum computing, is obviously going to be over the next, in a decade's time, the next big game changer, but we better start getting ready for it because the years go by pretty quickly these days. And then linked, I think, into all of this is what we always talk about of fintegration, which is how is it that we're really leveraging all the different innovations that are happening around and incorporating them into our business models without having to own them all. So those are the two big trends that we see.
So I would agree with Jane that, and Jenny, my good friends here, that clearly, it would be great to have another technology revolution taking place. But we're very busy with what we currently have right now. So clearly, quantum computing will unleash an incredible ability to calculate things. But we got enough right now, so the ability, what we are, as I said, at the cusp of is the equivalent of the search engine on top of data for consumers, the search engine on top of investment data, and the unleashing of that power to understand portfolios, to understand companies, and to understand that and create that transparency, and being able to calculate a lot of that through cloud computing, being able to distribute it through through a lot of obviously software applications, but importantly with an analyst at your the analyst that you were talking about, Jenny, in the intelligent analyst but you can trust though.
Well, Henry, Jane, and Jenny, thank you very much for your time. This is a sector that obviously is very important. It has shown exponential growth over the last few years, and I'm sure when we come back next year, we'll have a lot of new things to be discussing. So thank you very much for your time, and off to lunch. Thank you.